Apple is one of the most widely owned stocks in the world by retail investors, mutual funds, and hedge funds. And it's been kind of a disappointment to all three for the last 6 months. Apple kind of quietly having its worst first half to a year in 5 years. But that may be about to change. Apple is actually the best performing FANG name this week. Question is, will Apple stock get its mojo back in the months ahead? John Najarian, by phone, you own the stock, you own calls. You're obviously bullish.
I really like the stock, the move that it's made lately, the endorsement that it's getting from more and more institutional investors, not just people that, I have all the respect in the world for analysts, actually, Brian, so I don't mean this lightheartedly, but I pay more attention to people who are putting their money where their mouth is. And institutional players have been accumulating positions in this name for months now. When it was in the low 120s, virtually every big block was being bought as people were either exiting or nervous and saying, boy, this hasn't performed well. They were selling to the diamond hands, if you will, if we use a digital currency or at least a meme/rebel stocks adjective. We see more and more of those diamond hands just buying all the way up in Apple, and I think that continues into the fall, Brian.
Diamond hands, Michael Farr on Apple. You're going to hold this thing for the long term, I imagine.
Well, I think there's no question about that. And when you look at some of the other names that we've talked about this morning that I own too, I mean, Google or Microsoft, and up 30 or 40% year to date when they've averaged 30%. I mean, those stocks have had a good run, and I think they still look good for the balance of the year. Apple hasn't run, and I've made more money being a bit of a contrarian by buying things that aren't hot, I don't buy the most popular thing out there on the day. And that sort of a discipline for a really solid company, I think, makes you better money longer term. So when you look at it compared to the rest of that group, I think Apple is the standout buy.
Is there any reason to not like? I mean, we're all Courtney on this Apple love fest. I get it, but Jeff Gundlach made a point a number of years ago saying everybody owns it. So why would something maybe go up at the time when everybody already owns the stock? I think you're going to knock Apple. It's where's the growth? iPhones are lasting longer, and if everybody already owns it, who's left to buy it?
I'll take your bait.
Let's
I'll
be
take
clear.
your bait,
There's a reason.
Brian. You know,
Courtney.
Take it.
Courtney.
Okay. And then we got to pass it to Farmer Jim because we usually agree on this name for sure. Ultimately, with Apple, that name has been crushed recently. I mean, and people for a while, like I've been sitting on my Apple position for a while, and I'm not seeing that growth that I wanted to see, but I know it's going to be there. So yes, their last products are lasting longer, but I still continue to buy them. Every child I have gets an iPad for some reason at this point because it helps mommy a little bit, right? I do not care when you have a name and a company that's as innovative and creative as Apple is. You have to be in that name. And I'll give you one. People were talking about Microsoft and actually holding it. We did see some large institutional sells at this point in Microsoft. And I'm sure it wasn't because they don't believe in it. Similar to Shannon. It's just that it hit some pretty high numbers and you want to trim a little bit to lock in at the end of a quarter. And think about what institutional investors are doing. They're benchmarked against the benchmark. How are you performing in that portfolio? And you got to take a few wins off. And so I think Apple, though, however, is at a point where it is set and stable for a breakout. And just wait for that next super cycle.
Houndstooth coat, Jim.
Yeah, listen, I'm so sorry I stepped on Courtney's toes. I misheard the cue. But listen, I think this is as simple as the line from All the President's Men, follow the money. This is a cash flow story. And when the stock is down, they're just buying and retiring more shares. These are real share backs. They shrink the share count by like 6% year over year. So if somebody is saying like, oh, I think it's overpriced, I think it should go to $90, and I know there are analysts out there. That is not like the analyst who has Tesla at 150. There's rationality to that call because the cash flow isn't there. But with Apple, that cash flow is there. If the stock dips, they just keep buying back more shares. Follow the money.